All right, what is up, everyone? This is Taiki here, and today I wanted to, interview one of the other crypto YouTubers that I deeply respect. His name is Noah Seidman. I think he has one of the most underrated YouTube channels in the space. He often talks about putting dollars to work and thinks about his portfolio management and like market psychology. And I just wanted to have him on as my first guest for this podcast. So welcome, Noah, and can you just tell us a little bit about yourself and when and how did you get into crypto?
Hey everybody, it's a pleasure. It's a long story, and trying to keep it simple. I have a background in electrical engineering. I've been an Android software dev for the last 11, 12 years, give or take at this point. And obviously, from a tech perspective, the concept of cryptocurrency as a software technology just made sense. My interest in it were probably in 2015-ish. Uh, what was my first crypto? It wasn't Bitcoin. It was Dash.
Okay.
Dash was my first crypto. I was mining it on Genesis mining for it was $3 a pop at the time, and I remember that thing was really rallying to 1,000. So those are my initial days, and a lot has changed since then. And the story that I tell nowadays is much more interesting than where we came from.
I see. So you've been in the space for essentially 6 years now. You were mining Dash. So how has your, like, how's your view on crypto changed from 2015 to where you are now?
The biggest change is that, well, maybe just an observation on my part, um, because the same way stocks are looked at as speculative assets, you buy something, you watch it go up in value, you sell something, you buy something else. It goes down in value, you cut your losers go, and you reallocate the value to the winners. That's such a horrible way to operate, meaning it requires a very extensive technical skill set. And the biggest evolution that I've seen is that um, that is no longer the case for the crypto space. And that occurred last year in 2020. My uncanny ability is to observe things from a macro perspective, 1,000-foot view, and to see systemic change. And that is not just a change, that is a massive radical shift in what can be normal operating procedure for engaging with the crypto markets, which takes a massive departure for our mindsets and even how we look at capital. So it's just extraordinarily different, and that's just something I observe.
Yeah, I agree. Like when I first got into crypto, I was just like buying things on Coinbase and just like hoping things went up. But as like the deeper I get into decentralized finance and DeFi and these like, create like amazing decentralized applications, I'm just like, yeah, like I can actually put assets to work. I can't do this with stocks, like, but with Bitcoin, ETH, USDC, I can like put them to work and actually they have utility, right? And I want to just transition over to I think what you're most known for, at least on your daily talks on YouTube, is like using dollars, like utilizing dollars and putting them to work and operating your portfolio as a business, right? So, and like part of my like most of my videos were inspired by your videos, and I tune into your live streams every single day, or on the weekday, and I look forward to them every single morning. So, my question to you is, on average, what percentage of your portfolio is in cash, and what advantages in the past has having extra cash allowed you to do?
So there's two different modes. We just exited a mode. The mode of operation while the market experienced irrational exuberance is to have a quantity of principal in cash, which means you have your list of assets. Cash is just another asset. So when the market's hot, you're trimming principal and reallocating towards cash, which is an asset on your balance sheet, so to speak. And all those assets can be used to borrow working capital in the form of cash. And that working capital gets put on the balance sheet, just like a business. So your cash on your books is the sum of your dollar principal that you have because you sold assets at the top or on the way up, plus the cash that you borrow as debt. It's just the way a business operates. So when the market's hot, you're trimming profits, accumulating cash on the balance sheet. And when the market's not hot, which is now, I argue, I don't have any principal cash on the balance sheet. I have my assets deployed. I have working capital that denominated in cash, which is added to the balance sheet. So right now, no principal in cash. I have debt in the form of cash.
I see. And I feel like your like mindset of like how do you like operating your I guess portfolio like a balance sheet and a business is something that's really overlooked at least by crypto influencers. I feel like before I started making videos, everyone on YouTube is like making these ridiculous faces and saying like, you know, Bitcoin's going to 500,000 in like 3 months, so buy the dip, like all this BS, right? About like bullish propaganda. And I feel like, you know, just putting stablecoins to work or like thinking of that mindset is severely undervalued. So I really appreciate how you think about crypto, and I do think that you're helping a bunch of people operate, you know, their business. Let's say. So let's just move over to talking about Matic. So I think both you and I were very bullish Matic, in particular Aave. So can you just quickly go over like your bullish case for Matic and the whole entire Polygon ecosystem?
Well, there's three large scale narratives I see at play. You have Ethereum, which is a digital financial system that spans the globe. It's permissionless, which means you in any country could interact with it. For instance, Binance Smart Chain is a digital financial system, but US residents are not allowed to interact with it, which is 300 plus million human beings on the planet. Quite a restrictive financial system. We'll get to see how the Chinese digital financial system plays out, but that's the second narrative. First one, Ethereum global financial system. The Chinese digital financial system is basically the BSN. The BSN is basically the United States Department of Blockchain Technology in China. They are full on blockchain. It is open. You go on Twitter, you look up the BSN, you'll see everything that the Chinese government is doing with regard to blockchain technology. And then you'll quickly see who's integrated with the BSN because they have a list of public blockchains. And the three most prominent, I would argue, is Ethereum, Polkadot, and Cosmos. I believe Neo and EOS is probably on there, but they have no financial system activity. Neither does Polkadot nor Cosmos for that matter, but they are closer, in my opinion, because you can see the development of the projects and the DeFi construction going on, so to speak. So very interesting. That's two large-scale narratives that I see. And the third is India. So Matic was made by three Indian entrepreneurs. Aside from how it started, right now it has reached critical mass. What does a financial system require to have critical mass? Requires critical mass liquidity to the tune of 8, 9, $10 billion right now of capital available on Aave. That amount of liquidity says, hey, developers, you're going to make a fortune if you start building apps because all that capital is going to get deployed to your DeFi application. The developers create their DApps, which says, hey, users, come use our DApps and you guys make money as well. So once the users start to deploy capital and tap those those many billions of dollars worth of liquidity, you end up creating monetary velocity. And this is in terms of literally every financial system around the world, spanning back however long you want to think about it. A legacy financial system, that's the way what's the way I look at the crypto space. So if you look at Fred M2 velocity for the United States dollar, it's crashing. But if you look at it's pummeled. It looks like is it going to get up? It looks like a boxer in the 10th round that's down for the count. So, but the velocity in the DeFi space is basically vertical. So that obviously applies to Ethereum and Matic alike. But we're on number 3 of the macro narratives, which is Matic, which is the India narrative. So what do you have? You have a financial system that has reached critical mass liquidity. The developer explosion is everywhere. You see the pictures of all the projects. And we have critical mass monetary velocity. With however many billions of dollars are on Aave, you have lending and borrowing, which creates money in terms of double entry bookkeeping. And then you combine that with 1 billion+ people. And you got to understand the mentality of uh, Indian kids, adolescents, and not middle age, but my age. I'm 38 and younger, but let's say 20 to 40. I used to manage a team of engineers in Hyderabad when I worked at American Express. And these boys are hungry. These boys are programmers. These boys are software engineers. And the country is filled with a population of engineers like probably no other country on the planet other than China. The amount of engineers in India is probably larger than the amount of working people in the United States of America. And the whole point of the narrative I'm trying to describe is a digital financial system just emerged called Matic, Polygon, and they have hundreds of millions of engineers that are going to be exuberant from a nationalistic and a pride perspective to build and deploy and engage in seeking opportunity. So I think that is a massive, massive narrative.
I see. I never really thought about it that way. I guess, I mean, I live in California in the US, so I don't really think about the entire global picture. And what you just said about the whole global narrative makes a lot of sense to me. And yeah, the India narrative is really interesting because, like, yeah, like every year we hear these news about like India banning crypto, but like we have all this like talented engineers in India that might feel like this nationalist, like this pride of like Polygon, Matic, that came out of India, and these developers might build on Polygon instead of these other chains. And I think in your streams you often talk about like GitHub activity and like the amount of building that's occurring in these different blockchains, and and I think that's a metric that I think we all should like track in the coming months and in the coming years. It's like, what's the activity on Polygon? Because I feel like I mean I follow Polygon's Twitter account, and I mean every single day there's just like new partnerships, new products, and it's really nice to see. But to follow up on that question, obviously like we're very bullish Matic, and like the Matic has allowed a lot of, I guess, retail to participate in DeFi and like actually use DeFi for the first time. Because me personally, I don't have a large portfolio, so I mean I've traded on like the Ethereum blockchain, but I can't really do much else with it because I can't afford $100 in transaction fees. So Matic has obviously been amazing, but this week Arbitrum recently launched their mainnet for developers, and they're rumored to have those apps deployed to the public in a few weeks. So that being said, how do you think these other layer twos will affect the ecosystem? So Arbitrum and Optimism, is that a threat to Matic, or do you still see Matic maintaining that critical mass liquidity?
I see them as mutually exclusive, and I see them operating in a synergistic fashion. The number of dollars, relative dollars in these systems is basically zero on the global scheme of things. So from a developer perspective, I think the nationalistic pride is going to encourage the young adults in India to deploy on the Polygon network. I'm unsure how things will play out in China. It's another topic of conversation unto itself. But with regard to Arbitrum and Optimism and even ZK rollups, I think as my narrative initially started, Ethereum is global. It spans the world. It spans even India. But so from a macro perspective, it will retain its lead from a network effect standpoint. It will grow larger and further than the smaller economies. But that's what we're talking about here. We're talking about a digital economy. And just like you have the US dollar, which is the global reserve currency, it's a global economy in many regards. You still have an economy in Britain. You still got an economy in India. You got micro economies all over the place. So they operate synergistically. And in no way, shape, or form throughout history has the concentration of financial activity and capital flow ever went to a single economy. It doesn't happen.
Yeah, that makes a lot of sense to me. Yeah, I think one thing that Matic has done really well is like with their liquidity mining programs. So with Aave, they launched a $40 million program, and the Matic team allocated like roughly 1% of the token to essentially give away tokens to use Aave, right? And like that's what has been so great about Aave on Matic is that you get paid to borrow and lend, and you can use your assets as collateral, borrow against it, and get paid to do so, and then you can use that cash or whatever asset and just do a lot of things with the other DeFi applications. So what I noticed is that the Aave rewards, so out of the 1% of the Matic rewards, 0.5% was allocated from the timeline April to June of 2021, and the other 0.5% is allocated from June 15th to the end of April of 2022. So that means that the Matic rewards will be cut by roughly 80%. So do you see that as a threat to Matic, or do you still like? I'm just giving like a potentially bearish case scenario of Matic because for Matic, yeah, because when those Matic rewards go down, like, do you see like funds leaving Matic and potentially going to maybe Arbitrum where there will be more liquidity mining incentives?
On the contrary, I actually see capital inflow just staying the same, if not increasing. You got to remember the Cresco Fin narrative. Those boys out of Switzerland hooking up with Aave because they got probably a couple $1 trillion worth of family office capital wanting to deploy. The incentives are great for bootstrapping. It's a nice deployment of capital from an entrepreneurial perspective. Throw around a couple of bucks, get the critical mass liquidity, and jumpstart the engine of monetary velocity. But as of right now, you can earn 2-3%. I could look at the numbers, but it's meaningful percent base APY on almost everything on Aave. Meaningful percent base APY on Curve, on Polygon. So if you compare that to negative interest rates in a lot of the deposit accounts for the global financial system, and dare we say even the 0.002% interest rates in the continental United States, anything is better. So the complexity with trying to understand the capital flow of the global financial system is time horizon. Many folks are thinking it'll go down, it'll go up, but you're talking about over the next coming years when a family office is losing millions of dollars a day when they provide liquidity to a bank. They're going to say, why are they providing liquidity to a bank when they can provide liquidity to other people? And those other people pay them interest. Instead of the bank getting the profit, they get the profit.
Yeah, and that's why Aave is so beautiful. Like using Aave every day, just like, oh yeah, like this is what the ethos of DeFi is all about. Like there's no middleman, and without the middleman, like the users share the profits, and like there's more to gain, right? I also in my past live streams, I mentioned or I speculate that Coinbase and other centralized exchanges is going to allow direct fiat on ramps from these centralized exchanges to Arbitrum. I think one of the biggest problems with Matic right now is that there is no easy on ramp from like a centralized exchange. So if you're working with a few $100s, you kind of have to go through Binance Smart Chain or you have to go through Ethereum and like pay whatever fees you have to pay. So I think that like this direct on ramp narrative for Arbitrum and optimism is huge. And like though it might not seem like much, I do think that this like if you think about the long tail of retail with like playing with a few $100s, because I'm sure there's a lot of people that would love to like experiment with DeFi, but they don't want to risk like four-figure sums to like use Ethereum and like even Matic, right? So I think that like if Arbitrum has a direct fiat on ramp from Coinbase, I'm gonna become a bulltard, and I'm just gonna like go all in. Well, not all in, obviously, but I'm gonna like really go into Arbitrum. So what are your thoughts on there? Like, what are your thoughts on like if decentralized exchanges direct like offer a direct on ramp? Like, how quickly do you see like these TVLs grow, like total value locked?
Oh, there's nothing to invest in with regard to Arbitrum. There's no way to capitalize on it. what you've learned over the last months and year plus with the DeFi space is exactly the same methodology that you will use when Arbitrum and Optimism go live and deploy, but you will have the first mover advantage. You know to apply your capital to Curve and to lock it for VE Curve. You've learned about convex finance and Yearn, and then the capacity to use derivative products to compound yield that are produced by these platforms. So what that means is, as the on ramp you see playing out, capital will flow in because the friction is being reduced. And you know the best places to deploy that capital to capitalize on um, uh, capital flow. And velocity, lending and borrowing. So when people are lending and borrowing, they need to exchange DAI for USDC. It's predominantly going through Curve, and then if it's going, it's maybe a little bit of Uniswap. Or it's going through 1inch, it's going through probably Curve or Uniswap. Or if it's going through Maca, the 0x aggregator, it's going through Curve and Uniswap. So all roads lead through these major AMM protocols. So all I see is not the speculation on an asset appreciating in the face of an immense amount of liquidity inflow. I want to provide the liquidity so people that are throwing money at these protocols have a capacity to perform transactions. I want the transaction fees. I don't want to make millions. I want to make 5%, 10%, 15%, so that every day I wake up in the morning, I have cash, just like a business, just like going to work.
Yeah, I
So
see.
I'm a bull also.
Yeah, I think we all are. I mean, once you start using these applications, it's hard not to be a boltard, right? I mean, you just see like all this like the frictionless like transactions, etc. Yeah, and I think you tweeted out like I forgot when like the market crashed, but we had like this 50% crash in like a period of a week or 2 weeks, and I think you were providing liquidity on Curve or some other AMM, and your APRs like went through the roof. So in terms of like in times of like crazy volatility, like being a market maker and like being a liquidity provider, like there's a lot to gain there, right? And like you made a lot of fees. So what are your thoughts on like I guess providing liquidity? I mean, you already mentioned it, but yeah, I
That's
think
everything.
yeah, I think it's like the general advice that everyone should hear
The,
about
the two,
generating cash flow.
it's all about cash flow. Nothing else matters, because if you have an asset that's illiquid or an asset that is stagnant equity, which brings up a variety of assets. For instance, well, I don't want to downplay the potential of very popular assets, but let's say an asset has no capacity to operate in the DeFi space. You can't borrow against it, so you only have literally one option: is to sell it. Let's say you've been holding this asset since like 2019. You're going to watch it go 100x on the money, and you're going to sell an asset that you've held on to for all these years. Nobody's going to want to sell an asset they've held on for all these years. What you want to do is extract the equity. It's the same thing like a house. Your house goes 10x on the money. The first thing that doesn't come to mind is to sell the home that you live in. You refinance it. You get a HELOC, a home equity line of credit. You extract the equity from it while you're living in the house. I want assets on the balance sheet where I could tap the equity to create working capital to put it to work, because I want those assets. It's not even that the assets are guaranteed to just appreciate. They're going to be volatile all over the place. With a long enough time horizon, all these assets are going to appreciate, especially if talking about the top tier majors. Give it time. Everyone expand your time horizon. Every asset on your balance sheet should be working. If your assets on your balance sheet are not working, you're missing out on the innovation that makes this market different than 2017 and 18.
Yeah, and the concept of stagnant equity is very good because I mean, if you buy a coin on some centralized exchange, like that's stagnant equity, right? I mean, because most of these coins they like dilute current shareholder or token holders because through liquidity mining incentives and whatnot, they're printing more tokens every single day. So you're like essentially losing, I guess, equity, I guess, by just holding them in these centralized exchanges. And if you don't put them to work, you're not doing it right. So I guess Noah and I like we advise everyone to at least look into DeFi and put your coins to work and use them as collateral, borrow against it, be a liquidity provider, a market maker, and generate cash flow. Right.
The most important thing is actually for the advice I give to new participants: stop buying assets, stop buying crypto tokens, start with cash. Buy DAI, buy USDC, buy USDT, buy GUSD, buy pure cash dollars. Take $50 and you throw it onto Aave and watch the cash come in. Watch the interest rate in real time, every second of every day come in. And just remember, in about, was it like a day worth of interest on Aave, you got more interest than your bank will give you in an entire year. And the reason I always tell people this is because it's $50. You go out to dinner for $50, or you do an experiment that shows you a way to manage capital that makes everything that you knew about the legacy financial system turn on its head. Who keeps cash in a bank? It's the most irrational thing I've ever seen. Anyone who deposits cash to a bank is a liquidity provider for a bank where they give you nothing. Why not be a liquidity provider for a bank where they give you everything?
Yeah, and with Aave, you are the bank, which is like the whole bankless narrative that everyone in DeFi loves. Okay, so I want to transition the conversation into more, I want to transition to like more of a Q&A session, where I'll just ask you a couple of questions and you'll provide some alpha for retail plebs like me that's trying to make it in crypto. So first, what is your most proud achievement in crypto? Because you've been in the space for 6 years, so you can answer this in any way. Like, what's your most proud achievement?
Excuse me. Getting into macro financials, I have achieved significant capital gains, and I could have done better. Probably my most proud achievement is the combination of digging into macro financials and how they work, from central bank monetary policy to the concepts of inflation, deflation, and velocity, and applying that to crypto assets and seeing how they're different yet the same. Different yet the same. So many similarities, so many analogous properties, yet they really change everything. And that's not hopium. That's not belief. As a scientist, as an engineer, these assets are digitally tangible, which
Mm-hmm.
is a fascinating, almost contradictory statement. Digitally tangible, and that's the thing that boomers don't have a capacity to process. They think because something is physically tangible, that it has more meaning. And as adolescents, I believe that's a true statement. Digitally tangible, but and that's a hard thing to digest because tangible by definition is physically interactive. But
Mm-hmm.
I think digitally tangible is an interesting expression that I could hang my hat on. So that's probably my most proud achievement, is having a much broader perspective than the vast majority of market participants looking into the crypto space.
Mm-hmm. And the idea of like we can always do better is like, for me, for example, I feel like, I guess before the dump, right, the 50% dump, I had I didn't have that much cash as part of my portfolio. I told myself I would raise cash because there's Aave on Matic. I can put it on Curve, etc. But greed got the better of me. So, I made that mistake once, and it's okay to make a mistake once, right? But you have to learn from it and never make the same mistake twice. Okay. That being said, the next question I have for you is, what is your biggest regret in crypto? I'm sure you have a lot, given you've been in the space, and so all the assets are so volatile, and we all make mistakes. But if you could share with us, like, what mistake have you made in the past, and like, what is your biggest regret?
My biggest regret was last week. I could have handled it better. I was 33% cash principal Tuesday
Mm-hmm.
before the crash, as in the night before the crash. I had 33% of my capital in cash, and I'm watching the chart plummet, and I'm like, oh, what an incredible opportunity to buy. I deployed cash too quick, and I bought at the bottom. I bought everything at the bottom, and the market was so volatile, on the way up, on the way down, on the way up, on the way down, and I was over trading. And I was capitalizing, and I was, at all said and done, I was able to build back to about 15, 20% down. from all-time high. As of right now, I'm sitting at about 33% down from all-time high. I could have done better, and that's only something you ever see in hindsight. I needed to wait. I needed to be more patient. I had the right strategy. The market's exuberant. You allocate cash to your principal. You accumulate cash. Right now, I'm not cash. The market's not exuberant. This is the time that I see to deploy cash, partially because it's contrarian ideology. I will do everything in my power to do the opposite of what the average market participant will do. Market's on fire. Doge is 70 cents. Yeah, I'm going to be in cash. Market's dumping. No one's not going to go any lower. Yeah, I'm not going to be in cash. So I could have played it better, and I lost a lot of money doing so the way I did it. But from March of last year, the pandemic crash, I'm up about 2,200%, give or take, and that's so I'm proud of that. I wouldn't mind that extra, 500,000% tacked on, but it's okay. We can do better, everyone.
Yeah, and just curious, like I wasn't. I'm like pretty new to DeFi. I've like really delved into the space this year in 2021, and I wasn't a market participant in March of 2020. So like, how did you handle that crash? Like, were you heavy cash leading up to it, or like I'm sure that was like a really crazy time. So I just want to get your thoughts on like how you dealt with that situation.
I bought a Bitcoin at $3,000. Bought. We didn't know where things were going. It was a very different narrative at the time. We didn't have DeFi. There was zero DeFi. I mean, Uniswap was doing nothing. And I was a buyer, predominantly because there was no other place to allocate capital in the legacy financial system. The system was falling apart. It was horrible. And I didn't trust anything under the Trump administration. I didn't trust any of the stock market going vertical. And it's nice to see the stock market leveling out right now. And actually, what's happening right now in the crypto space, I really like to see it. Markets don't go straight up, at least healthy markets. Healthy markets go horizontal. Healthy markets don't go down. They don't dump. Healthy markets churn, like ice cream churn, like butter, just literally going nowhere. Up, down, up, down. That's a healthy market where there's a balance of buyers and sellers. If the market's going up, there's an imbalance. That's an instability, and that's not necessarily a good sign. So I was a buyer in 2020, and that worked out well. I was on a fun note. When Curve launched, when Curve especially launched Renda BTC, I was probably the first 10 liquidity providers. They gave me so much Curve. I love Curve. Curve is such a wonderful platform. Every single Curve I've ever gotten is just locked. It's just a wonderful platform. But the same with Convex. They gave a nice airdrop for V Curve holders, all locked. I'll never let go of that stuff. That stuff is pure gold.
Yeah, and you have your Curve locked for like 4 years, right?
4,000 years. That is pure gold right there. The Curve monetary policy is one of the most powerful monetary policies that give central banks a run for the money. It's the ultimate MMT monetary policy. But not that MMT is necessarily a good thing, especially in the legacy financial system. We all know the debate that macro financial folks talk about with sound money and MMT and the tragedy of what the Fed's doing, monetizing the deficit. But Curve is the ultimate MMT monetary policy. Decaying hyperinflation coupled with hyperdeflation to prevent debasement.
Can you go deeper into that point, like hyperinflationary and hyperdeflation? Like, I'm not like a Curve expert, right? So I want to hear like your bullish take on Curve. Like, can you go into more detail on like why you're such a heavy Curve believer?
So inflation, it decreases the value of the assets in circulation because now there's more assets in circulation. People are encouraged to sell. So if you notice when Curve first launched, it just went straight down and kept going down and down and down to like 25 cents is where I got my entry, for the vast majority of my entry. It took a while for the deflationary pressures to overcome the inflation. So Curve is a decaying inflationary monetary policy. Inflationary mean it's growing fast. There's a huge amount of emissions, but that will decrease, I believe, in August. So it'll become that's disinflation, which is it will deflate a bit, or it could become increasingly disinflationary. A lot of semantics involved in this game, but because people are encouraged to lock their curve for 4 years to receive platform transaction fees, that is an immense deflationary pressure. That is removing supply from circulation. That causes supply disruption. That means there's less assets available to sell, which means when someone wants to buy an asset, they now have to go to a market that has less assets that they could buy from. Now, what's interesting is that if you just have the supply disruption, which there are assets that have that kind of monetary policy, like Badger has a monetary policy and it has incentivized supply disruption. Curve has the longevity because of the platform transaction fees. In 4 years' time, if VE Curve holders, if someone's making, let's say, $500 a week right now, and in 5 years' time, 4 years' time, when the lock expires, that $500 a week is $5,000 a week or $20,000 a week. Do you think they're going to unlock their curve and sell it? It's a commodity. It's a very powerful asset to be had. So I just I see rolling locks. People are just going to lock it up because they don't want the curve. They don't want to sell the curve. What they want is the platform transaction fees. It's like a dividend from a company on a future financial system.
I see. Yeah, that's very insightful. And I guess like you talk about like the monetary policy, right? I feel like it's similar to Bancor, BNT, where like almost like 80% of the BNT is locked up, and it kind of incentivizes like holders to just like lock it up and have the current token holders like accrue value. So you mentioned that you bought Curve roughly 25 cents and you're like locking it up forever essentially, but you also mentioned that it took a while for your thesis to play out, right? Like it went sideways or down for like however many months before it recently like gone up a lot. So how do you build conviction for these particular projects when the price tells you otherwise?
Comes with experience, and it comes with that proudest moment I mentioned earlier. Doing my due diligence into macro financials and understanding what made the legacy financial systems what they are. What gave the good times to economies, what presented the bad times, understanding the conversation that Jerome Powell and the central banks around the world have on a frequent basis: inflation, deflation, and crumbling monetary velocity. So what I rely on is myself and my understanding of these systems to choose assets that fit my requirements. So Curve is outside the scope of my balance sheet ideology. But what does it do? It provides me capital to deploy on the balance sheet. So it does have a relationship to my, prevailing or most important ideology, the business. So it provides that revenue stream. So just like RenVMs. RenVMs, they produce a constant income stream, which in theory, speculatively, will grow to be significant over the coming years, adding more capital to the balance sheet, allowing me to borrow more capital, allowing me to put more capital to work in order to compound that recurring revenue stream.
I see. So it seems like I guess like your mindset and how you allocate capital and how you look at your balance sheet. It seems like you have your balance sheet, right? Which is like maybe like that's on Aave, on Matic. And you have these different entities, let's say, like on Curve, Bancor, that's generating cash flow. And it's like a small business. It's like a startup that you have that's like, giving you dividends, and that those dividends you reinvest back to your balance sheet to, allocate capital elsewhere. So I think that kind of mindset is really valuable to newer DeFi participants, or just like in crypto in general, because like I think a majority of folks, they just like think of crypto as a speculative thing that like either goes up or down. But once you start thinking about these assets in that way, you start to understand like, oh yeah, like these different projects have this type of monetary policy, and this type of monetary policy accrues value to this token. It might play out over 24 months, but this is my thesis. I'm gonna stick to it, and it's obviously it's done tremendously well for you. That being said, like what has been like your biggest surprise in this particular bull market? Let's say 2021. Like not Doge and these dot coins. Like I think that caught everyone off guard. But is there like anything that like really caught you by surprise? So for example, like you were bearish like this type of sector, but it turned out to be like a really tremendous investment opportunity, or you were very bullish this type of sector, but it turned out to be a total dud. So what has been your biggest surprise so far?
All right. Well, it you could say that DeFi Summer 2020 had an ICO rush of sorts, but what's not just surprising, but it's also relieving. If you think about that, what I just said, jack shit came out of 2017 and 2018.
Hmm.
Not to be profane or
Yeah,
anything,
no
but
problem. Yeah. No.
nothing came out of it at all. I find Bancor and Maker were from the old school days, so a couple of things came out of it, and Bancor was a massive ICO, but the vast majority of everything is gone. What came out of 2020? Look at the ecosystem that's on Ethereum. Look at the ecosystem, those charts, those ecosystem charts on Polygon, those ecosystem charts on Polkadot and Cosmos, even the ecosystem chart for BSC. It's massive. That is it's not even the antithesis of 2017, 2018. So what I like to say I do well is I observe the disruption, the systemic change. So that is my biggest surprise or the best observation. It's extraordinarily different than the way it was historically. Everything, everything has changed in an extraordinary way. So this prices are absolutely irrelevant. What's important is the way legacy financial systems operate and looking at the properties of the crypto space, looking for the exact same properties
Hmm.
that we see in legacy finance.
Yeah. Do you see a DeFi summer coming again in 2021? I feel like a lot of people are speculating, and especially with like these like Matic Arbitrum Optimism like launching, that it makes DeFi more accessible. Do you see like a DeFi summer like V2 coming?
It'd be strange not to see it.
Yeah, that's what I'm thinking too. I feel like a lot of people think the bull market's over, and like I'm not gonna say it's not over. I mean, there's always a non-zero chance that it is over. But if you think
What
about all
does
the
over
bullish,
mean?
I guess,
Down?
yeah, I guess like price going
Where's it
down is
going
like,
down to? Why? So the price is irrelevant, and
yeah,
that's what that is what I hang my hat on. What matters is where do you see it in a couple of years, and what we have now from 2020 to 2021. Wait 4 years, everything changes, and that's just for Bitcoin. You have any idea what this shit's going to be like in 2025, 2030? These are the assets to accumulate. Every single one of every person that watches this video will be getting up and going to work tomorrow, no matter what, and the day after for the next 4 years. The only logical course of action is to accumulate revenue producing assets. Whether it could be, look, if you go on Twitter and you follow the like the boomer, mid age, like the 40s and the 50s, the folks that are like into dividend stocks and preferred stocks for the
yeah,
yield and
Verizon 5%
yeah,
dividend.
stuff like that. And they're talking about the same thing we're talking about, except they're not seeing what we see. They don't see digitally tangible. These are the assets to accumulate for the next 5 years or the next 20. It's just continuously accumulate, increase the revenue stream, and in 5 years' time, it's going to be extraordinary.
Yeah, like I mean, we're all like we mentioned earlier, like we're both boltards when it comes to crypto, and I feel like even if price goes down, it's like money's not leaving the space, right? Like the TVL on Aave on Matic, it's not gonna leave. Um,
Here's a
we're
fun one.
Yeah, we're in
Here's
this like
here,
10-year bull market. Yeah, go for it.
check this out. Let's say you got 100 grand and you're earning 3% interest, and 100 grand with a Matic, you're earning 3% interest for the next 4 years. That 100 grand worth of Matic turns into 20 grand worth of Matic. You're still earning 3%, the same 3%. You're still earning the same amount of Matic. So the principal will go down. The amount of Matic you're earning is the same. So in 4 years' time, when the principal goes up in value, you made all that interest for all those years, denominated in that higher price point. All that matters is your interest rate and enough time horizon to see the big picture.
Yeah, I agree. And it's easy to get caught up in short-term price movements and feel down sometimes. But yeah, I guess what you're saying is like what matters is like collecting like these tokens. Like it's about the number of tokens that you're accumulating instead of like the dollar, like the dollar value. Like, would you agree with that?
Absolutely. Kevin O'Leary said that. I believe he said when he was talking to
Yeah.
Pomp, there was two words. Two words that he said surmise a very meaningful concept. More coin.
Yeah.
He didn't mean, I know exactly what he meant, and he meant exactly what I'm saying. He said he said that because he said that to account for what we know as volatility. It goes up 1 billion%, it goes down 1 billion%, and all that matters is you're constantly getting more coin, which means you're constantly generating increased revenue over time because he sees it as a business as well.
Hmm. Yeah, and I think as more institutional money flows in, do you see these yields going down as long as like as more institutions enter and like more I guess wealthier individuals like search for these yields when they can't get like amazing yields in like the traditional market.
So everything that we experienced in DeFi Summer 2020 that's the ICO phase. That's garbage. It's absolutely junk. 1,000%, 500%, 100%. It's not even remotely conceivable to be sustainable. And the incentivized yields will evaporate because they will become trivial. The incentivized Aave. This is a blessing. Anyone missing out on these extra 10, 15, 20% is missing out on probably one of the luckiest opportunities in the last God knows how long, 100 years, whatever, because they're gone. Liquidity flows in, those yields are diluted to zero, basically zero. The time periods eclipse, and those yields are done. They just expire, and all we're remaining left with, all that remains is the base APY, which I expect to go up.
Hmm.
More transactions, those numbers are going to go up.
I see, yeah. So I want to wrap up the conversation. It's been great talking to you, and I'm sure a lot of
Pleasure.
our audience has gotten a lot of alpha as well. But obviously, you've been in the space for 6 years. You've learned a lot along the way, and now you have this business that's generating cash flow. And yeah, I mean, for people like me, right, who's newer into the crypto space, like what mistakes do you see, newer participants in crypto make, and like what would be like your biggest advice and like can you share some alpha and like how do you make it how do I make it in crypto?
Same way I did, and I didn't bet the farm. Uh, I've gotten lucky in a couple of bets, but over the last year and a half, uh, 3 bets. I've made 3 bets that have made the capital. So folks are out there deploying way too much capital. Back in 2020, I bought into Bancor, Kyber, and Synthetics. Uh, with well, it was probably about 30% of my capital at the time, and that changed everything. I rode Synthetics from 70 cents to $7. That was a beauty, and I still have Synthetics, and it was all free because it's compounding interest.
Hmm.
Kyber hasn't done as well as I would have liked, and Bancor that obviously went from like 30 cents last year to as high as $9, $10 this year. So and it's also compounding, just incredibly compounding. So the second one was Rook. It was like $65 to $800, and then Matic. I saw it probably 35 cents. And the same thing with Rook. So I saw it at like $18 and went to 65, and Matic I saw at 35, and I really saw the narrative change, the story change, and I got in at 70 cents, and that went obviously closer to $3, and that's still my largest position. So the most important alpha I could tell you guys is it doesn't matter your portfolio size. Do the exact same thing I do now, which is not the same thing I did back in 2020. It's better. So it doesn't matter the portfolio size. You want the business. Take 1% of your portfolio. So I have the business, but just as you mentioned, I have Curve, the Ren VMs, and a bunch of other stuff. Those are small. That's like 3% for Curve because it grew from basically a tiny portfolio holding. But I also have Polkadot, Cosmos, Bancor, Kava, Band Protocol, Blocknet, StakeNet, Firo. So all these 0.5% bets all over the place. That's where the money's made. The big money isn't made with the big stuff. The big money is the stuff you want to protect and generate a constant predictable revenue stream. But it's those 0.5% bets that if you have a 100 grand portfolio and you take $1,000 bet and it turns into 100 grand, go. So that's what changes everything. So what wrecks people is trying to turn that 100 grand into 200 grand. You want to turn the $1,000 into 100 grand. Risk adjusted returns, and take your foot off the gas pedal. Take a step back, deploy cash, seek advice, talk to people, ask questions, and whatever you do, don't watch BitBoy.
All right, I guess we'll wrap up the stream. Wrap up the interview with that comment. Do not watch BitBoy. That is the biggest alpha you can share with you guys. Unsubscribe to BitBoy. Don't listen to him. All right. So, thank you for this discussion. It was really useful. For anyone that's like watching that wants to follow you, like where can they find you? And like, is there any group that you're a part of that like you want to promote or like just like talk about?
Sure. So I do daily streams at 11:30 a.m. on YouTube. Noah Seidman. Very easy to find me. Twitter, Noah Seidman. If in my Twitter profile is a link to YouTube, my Discord forum, which has a lot of people at this point, and you're welcome to join. And we're talking about these topics day in, day out, trying to understand the market from a different perspective, trying to do things the opposite the way the vast majority of the market handles these things. Our motto is be different, and we could do better. And that's the truth. So if anyone has any thoughts, ideas, Taiki's got this covered, man. You're an ambassador at this point. You know the deal. You know how to be different. So
Trying to be different. Yeah.
You're doing just fine, my friend.
Yeah, and I'll try to make more contrarian bets to you. It's like when the market's bullish, raise some cash. When the market thinks it's going to go to zero, deploy that cash. All right. Thank you for this conversation. And I hope to talk to you again at some point in the future.
It's a pleasure. You have a good one. I'll talk to you soon, my friend.